Glad you went right there to payments. It's an area where you've done decades of research. Maybe you could talk a little bit about what the priorities are for the Fed in terms of this payment space. And then say, every meeting I go to, the word of the day is stablecoins. Can you say a little bit about how you're seeing stablecoins, what you see as the use cases, and what the risks are that we should be thinking about?
Yeah. So the Federal Reserve, since its founding, one of the things that the Fed was charged with by Congress in 1913 was to provide kind of a safe, efficient payment system at the time. I mean, it was at a time when, you wrote a check in San Francisco and somebody on a horse rode it across the West and took it to another horse and eventually got to the East Coast. I mean, that's the kind of, seriously, that was what Congress realized. We have to have a national bank or a central bank to make the nation's payment system more efficient and faster. And that has been part of our job for over a century. And that's why I take this job extremely seriously in terms of being the payment oversight governor. So we have our typical big payment currency, obviously one of the big payment instruments that we oversee. We have ACH, Fed ACH, which is the standard batch processing way we do payments, payroll, and things like that. We have FedWire, which is typically the large transactions up to $1 billion that have to be made. And then we recently have FedNow, which is our real-time payment system that we launched about a little over a year ago. And we're trying to develop that now to have it more, again, a faster, cheaper payment system for the US taxpayer. So that's kind of what we do. That's what I oversee. It's been a long part of our history. But there's nothing that is evolving faster and being more disruptive than the payments industry. For years, this was like the dullest thing you could ever want to be part of, right? Somebody with a green visor and a pad and paper and doing some debit and entries. No, this is the coolest tech job on the planet right now. So there's so much innovation happening, both in terms of how payments are getting done, who's doing the payments, what are the objects that people are using to make payments. That's why the job I have now is super fascinating. I go around and talk to payments conferences, payments people, find out where things are going. And that brings us, I guess, to stablecoins, which, is probably going to pass here soon. Now, stablecoins are just a new method for making a payment. I'm going to use a very simple analogy that won't scare people because stablecoins came out of the crypto world, and you say that, people freak out. But it used to be, apparently not anymore, but it used to be you go to a casino, they won't take dollar bills on any of the tables or anything like that. You go get chips, and you get a poker chip that matched $1, and then the platform, the rails of the casino were all the tables. And you move those chips around the tables, and then at the end of the night, you collected them, and you went back, and you cashed it out. So it's just a different payment instrument for moving on a different set of rails than we typically do in our normal daily life. But that's about as simple as I can explain it. So stablecoins are just a new dollar token, just like a poker chip, that is now going to trade over a different set of digital rails, typically the crypto rails, Ethereum, Solana, these various platforms. What is that going to do? It's going to open up different ways of making payments. These are fast 24/7 by 365 payment setups. They're just a dollar representation. They don't pay interest. You have to have them fully backed. There's no banking credit backing this up. It's just pure liquid assets, treasuries, or reserves in the Fed. And the whole idea for me is that this is just going to introduce competition in payments. It's going to make cross-border payments so much easier. It's going to make them faster, and it's going to make them cheaper. And that's the goal for me as a free market capitalist economist, is I want competition in payments to drive down the cost for households and consumers and businesses. That's it. Banks have to compete. Sorry, that's your job. So it's not my job to protect profits of individual firms. So that's it. But I want a level playing field. If you're going to introduce a stablecoin, let the banks in on it too. They can go compete, see what happens. But I just think historically, because stablecoins came out of the crypto world, because they realized the standard problem. I got to pay for something that somebody wants. I can hand them some Dogecoin, but nobody wants that. Maybe. But if I say, oh, this is a dollar-backed stablecoin, and when you're done, you can go cash it out, people are like, yeah, I'll take that. So even in the crypto world, this is where stablecoins came. They realized the need for a payment instrument that's safe, stable, and backed by a US dollar. They're not trading Bitcoin to pay for things. No one's buying pizzas with Bitcoin, but they do with stablecoins. So that's what it is this is an innovation in a world people have been afraid of for the last 4 years, but it's just a piece of technology to conduct a payment. That's it.